Alright guys, so in this video, we're going to talk all about how to quickly find home run setups on a day-to-day basis. So these are your real exciting trades, your big bang for your buck, your really high reward to risk trades. So let's get right into it and we'll give you some criteria to look for. So a couple things that I like to do when I'm looking for really big setups. You won't get these every day, but when you do get them, they're really exciting. So first thing that I'll do, and I'll give this as an example, this is just from the other day. So I'm looking at S&P 500 futures here. If you followed any of my stuff, you know that's what I prefer to trade. You can do the same thing on any stock, any index, currency that you want. I just prefer the S&P because it's what I'm used to. If you can make all the money that you want to make on a single thing, why not do that? So first step to this, and we'll give you some criteria that you can go through, and I encourage you to practice this. So just like any of the rest of my videos, guys, you shouldn't take this as personalized advice. I don't know you, I don't know your situation. And anything that I say, you should practice first. Do your own due diligence, and you'll see that it works. But step number one is I want you to go through and look at the daily chart on whatever you're trading and identify your daily highs and lows. So coming in today, for example, we had daily highs up in here and daily lows down in here. What we're looking for is a couple different criteria, and I'll outline those criteria for you. But that's step one. Identify your daily highs and daily lows going into the day. My day, I trade the 9:30 session, so 9:30 a.m. Eastern time. I'm going to identify these highs and lows before that session starts. I like to trade off of shorter time frames, so I'm going to go to the 1 minute. The reason I like shorter time frames is because it puts me in a position to be in the highest reward to risk type trade. If I can trade on those time frames and understand how they work, I'm always going to put myself in a higher reward to risk position than if I was trading on larger time frames, which means I can size a little bit better. I can do more contracts and make more money off of it. Still works on different time frames. I'm just going to give you some examples. So our 9:30 open is right over here. And here are those highs that I drew. Here are those lows that I drew. And what I'm looking for is step number one. I want to see those highs or those lows get taken out. So I want to see price push above those highs. And really all this is a trigger for me that bigger institutions, the guys that actually move money, your hedge funds, your banks, could be pushing price above this high level to gain extra liquidity. Take other people's money basically before a bigger move in the other direction. That's step one of what I'm looking for, is those highs to get taken out. And you see that happen on this candle in here. Now, the next thing that I'm looking for is a market shift. And think of this like a confirming factor of a change in direction. So price was trending up. We took out these highs. I want to make sure that it's going down before I enter a short position, before I buy a put or go short on a particular trade. So what I'm looking for is a candle that closes below these lows in here. And you get that on this move in here. Really this move in here as well. You get a candle closure that's below these lows. And that gives me more confirmation that the market could be shifting in the other direction. Third thing I want to look for is what I call displacement. And all that really is a bigger explosive candle that presents a gap in pricing for me. And I'll show you what that gap looks like. And you hear it called different things. It doesn't really matter. All it is a gap in pricing. It's an inefficiency where you can find a really high reward to risk type entry. And you see that on this candle here. Notice how on this candle it's big enough to where you don't have any kind of wicks that cover up this little space in here. And this little space, I call these sweet spots. You hear them called fair value gaps. Doesn't matter. It's a pricing inefficiency is what this is. And this is where you can look for your entry to continue this downside move. So again, step one, draw your daily highs and lows. Step two, wait for price to come above those highs or below those lows. Step three, you're looking for a market shift. So price to close above some kind of low before that move, or some kind of high after that move. And then you're looking for displacement and a pricing inefficiency as steps 4 and 5. And you get that here. Here's your entry in this box, and you get your downside move. Let's look at it from the other direction now. You see lows taken out in here. So here's my lows taken out. I do get price that pushes up here, closes above these highs. And now I'm just looking for a pricing and efficiency. I'm looking for those gaps in pricing. And I can see some in here. And I can see some in here. This one doesn't get touched, but the second leg in here does. Here's my upside entry on this candle coming back in my box. And here's my big move. And because we're working off of daily highs and daily lows, you can see much bigger moves off of this. If you're trading futures or options, just this move from here to up in here could be a week's worth of profit for you, depending on your size and how you're trading. But it's certainly a trade that's worth taking, and maybe the only one you need to trade on that particular week. So that's how you quickly find home run opportunities on a day-to-day basis. Find your daily highs and lows, set alerts around those areas, and go through the criteria that I just gave you, and you can put yourself in really good reward to risk type trades. Now, again, you want to practice this first, go back through your charts, look for opportunities like this. And if you want to learn more, you want more trading tips like this, be sure to like, share, subscribe to this channel. We give away all our ad revenue at the end of every single month to our top subscribers because we want to get good information out there. We want to help this channel grow. We'd love you to be a part of it. So like, share, subscribe, and we'll see you on the next one.